What's going on YouTube? Welcome to this special video about Palantir. Over the past few years, Palantir has become one of the most popular stocks on the market and has risen by hundreds of percent. In this video, I'm going to tell you whether that rise is justified and if Palantir is a good stock to invest in. It took me a long time to make this video, so I would really appreciate it if you could subscribe to this channel. Don't forget to leave a like and a comment as well. Let's get started. What is Palantir? Palantir is an American tech company founded in 2003 that built software to assist in counterterrorism investigations and operations, in their words. It was founded after the 9/11 attacks, and its biggest client is still the US government. Later on, they also started building software for commercial companies. Currently, they have four software platforms: Gotham, Foundry, Apollo, and AYP, the AI platform. How does the service work? I'll briefly give an overview of the four products and their main functions. Gotham helps governments and defense agencies analyze large datasets for intelligence and counterterrorism purposes. Foundry, used by companies for data integration and analysis. Apollo, manages the continuous delivery, updates, and security of Palantir software across both cloud and on-premise environments. AYP, integrates AI models into existing workflows to accelerate predictive and decision support analytics. Who are the customers? As mentioned earlier, the biggest customer is the US government, including the United States intelligence community and the Departments of Defense. In addition to that, Palantir works with dozens of well-known large companies, mainly in the US and the UK. The numbers. How is Palantir performing? We're going to look at several key metrics: revenue, profit, free cash flow, and margins. We'll also go over growth expectations, the latest earnings report, and a balance sheet. This will be the longest part of the video as there's quite a lot to cover. First up, revenue. Revenue has increased significantly in recent years, as you can see here, from 1.5 billion to over 3 billion so far. Next, profit. The company has been profitable since 2023, and the profit is growing steadily. Same goes for free cash flow. If we take a quick look at the balance sheet, it also appears to be in good shape. Then, the latest earnings report: strong growth overall, but with a downside, a decline in international growth. If we look at the growth expectations, we see that the company is projected to grow by 35% this year and nearly 29% next year. This is higher than the growth expectations of the S&P 500. Finally, let's talk about margins, where we see something interesting. The company has a very highest growth margin of 80%, which is great, but the operating margin is much lower. Also, the net profit margin is actually higher than the operating margin. That's because Palantir receives a lot of interest income, which boosts its profit. However, this isn't a fair indicator and represents a risk, since this income doesn't come from the company's core operations and therefore isn't sustainable. In their Q1 presentation, they mentioned an adjusted operating margin of 44%, but adjusted figures are non reliable, and it's unclear what exactly the number is based on. Risk factors. Palantir is a highly controversial company and it faces the following risks. 1. Dependence on government contracts. As mentioned earlier, Palantir is heavily dependent on government contracts. A cut in defense budgets could significantly impact the company. 2. Controversial reputation. The CEO and one of the co-founders, Alex Karp, is politically very pro-Israel. The company provides software to the Israeli military, which enables the continuation of the current war. Karp has previously stated that the company lost employees because of this. There's also a long list of organizations and companies that, due to concerns over human rights violations by Israel, have decided to stop using Palantir software. Some notable examples include the University of Cambridge, a Norwegian sovereign wealth fund, the New Orleans Police Department, and UNICEF. In the latest earnings report, we already saw a decline in international growth. This could be related to the company's controversial reputation What didn't help was that Carp gave no further explanation on the matter. This remains one of the biggest risks for Palantir, as its image may continue to deteriorate, potentially costing it future contracts. 3. AI hype dependency. Palantir has recently benefited a lot from the increased adoption of AI. If this trend slows down, the company's future growth could be significantly reduced. 4. Valuation, which brings us to the next point. Valuation. Now you arrive at one of the most important points, the valuation. Palantir is truly a league of its own here. It's one of the most expensive stocks ever on the market. It currently has a PE ratio of 520, a forward PE of 217, and a PS ratio of 96. That means you're paying almost 100 times revenue. To put it bluntly, this is absolutely insane. Even for a fast growing company like Palantir, this valuation is not justified. Tech/AI giants like Google and Microsoft are already considered expensive, in my opinion, even overvalued, with a forward PE ratio of around 35. Palantir is nearly 7 times more expensive than that. Based on this, your future returns are close to zero and your downside risk is very high. Stocks with such extreme valuations are priced to perfection, meaning that if the company delivers good results but not exceptional ones as expected, the stock could drop significantly. Conclusion. Personally, I would definitely not invest in Palantir. First of all, I wouldn't want to put my money into a company that acts unethically. Of course, that's a matter of opinion, but for me, it's very important not to invest in something I don't stand behind or believe in. On top of that, the risks are simply too high, especially the valuation. The downside risks are significantly greater, making this the downside risk is significantly greater, making this a very unattractive investment from a risk reward perspective. If you enjoyed this video, don't forget to subscribe, it really helps me out. Leave a comment, and I'll see you in the next video.